Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, to help us break it down. Scott, I thought this was kind of going to be looked over and just kind of brushed off as old data, but it does look like it's actually moving markets. The PPI coming in a little higher than expected.
It is a little higher, Ben, and it's a hot number. And yes, typically, we will just kind of look at it, glance over it, and move on. But I think when you look to see what's happening with the dollar recently, the move, over the last 2 weeks, 4 weeks, 8 weeks, the big decline, and then now some stability, this number adds to that stability, right? Better PPI number, which is a leading indicator of CPI, is usually pretty positive for the dollar. So we're seeing the dollar rally, which, could be the cause of why we're seeing gold back off a little bit and what's going on with rates this morning. So this is an interesting number today. Again, this is one that, we get the number, we move on. But given what the current environment is, especially with the dollar, this one's a very important number, I think.
Yeah, bonds are getting this number and moving on down in a big way, down to the 180 handle. But, when you tie this number, Scott, together with the better than expected jobs data that we saw on Friday, I mean, in theory, one could point to a little bit of a trend coming back into play here, some beats on the U.S. economic data point side. And that would explain why you see rates coming, getting a lift, the Treasury's coming off a little bit, and ultimately why the indices are rallying. The Dow just got up above 28,000.
No doubt that is all kind of working its way together here. And what I don't want to say pessimist, but how cautious I was on that jobs number going in the last week. And the number was better than expected, way better than what I thought it was going to be. So these, when you take all of the pieces of the puzzle and put them all together like they are right now, I mean, it's hard to fight this right now. And the puzzle is getting a lot clearer, if you will. There's still obviously the concern of, going forward, reopening, this, that, and the other. But, so far economic numbers that we've seen over the last few weeks are looking not too bad.
And we're seeing a reflection of that in many ways. We're looking at rates here. We were just talking about treasuries, the downside. We always make it very clear, the inverse correlation, Scott. Let's real quick talk about how the dollar is actually losing, some of the momentum that we had been seeing the downside as well recently. I just want to pull that chart up so we can take a look, because the dollar had recently bottomed out into a multi-year low right around that 92.45 level, but it looks like it's starting to consolidate. I mean, this sort of feeds right into that narrative. Again, if we're starting to see some economic beats here in the U.S., then maybe some of that downside momentum in the dollar would slow some at the very least. We still have yet to rally off recent levels, but we've lost some of the momentum to the downside. Is that what you're seeing?
Absolutely. And, once we broke through that March low in the dollar, all bets were off. I mean, we could have seen a massive further drawdown, if you will. And, it went down a little bit further, but it is stabilizing. So I think that's why you're seeing some pretty big moves, not just in gold, but in rates as well right now as we see the dollar stabilize.
Big time. These markets, these trades have been overcrowded for a while. It'll be interesting to see how some of the dust settles as we see some of that momentum losing some of the directional conviction that we had been seeing in terms of price activity. Now, you mentioned a minute ago how PPI feeds into CPI. That's obviously one of the next data points or a major focal point this week. One of the things I've been keeping an eye on, Scott, in terms of inflation, now the new PPI number today might change that a little bit. But as far as real inflation without energy prices, we were talking about this yesterday. Crude's holding below 45, nothing really concerning there. We saw a nice rally in some of the other commodities, copper and some of the other majors, but for the most part, some of that's even slowing, similar to some of the moves we were just talking about in the dollar and rates recently to the downside. But I keep thinking we're not going to necessarily see or have inflation concerns, even related to some of the stimulus measures, unless we see some sort of supply chain issues, some sort of supply chain concerns, because even some of the stimulus measures that we had been seeing are starting to come out of the economy right now. We have further in terms of some of those payroll, those added payroll numbers that came in even after the president signed the executive order yesterday. So a little less now feeding into this, potentially less concern about inflation. Would you agree?
Absolutely. It's almost been a non-existent talk for the last 6 weeks, 12 weeks. Whatever it is. And I think this feeds that, further. And I don't think inflation is on the forefront of what the Fed is looking at or what many economists are looking at right now.
Scott, one thing we took a look at the top of the show was volatility, the VIX. I'm sure that's something you keep an eye on. I noticed today it's down something like 9-10 days in a row. It's been coming off quite a bit. Now it's inching up just a little bit off lower levels from overnight, but back into the 20 handle, now back above 21. What are you watching there, and what's it telling you?
I mean, it's telling me that there's a lot of complacency out there, that the expectation is that for the market to continue its grind, which is really in tune with when we see volatility come down. I'm a little skeptical on the VIX trading so low right here. I still think that there is just way too much that can happen, not just with COVID, not just with economic numbers, but obviously with the election only just months away at this point. The election's not 6 months away anymore. The election is getting closer and closer. So I think that the market is justifying a higher VIX at this point. I wouldn't have said this, a year ago. I mean, a year ago, the trade would have been the VIX to be in the mid-teens or low teens. But I just think there's too much headline risk right now to warrant a 20 or 21 handle VIX.
Noted. Well, we'll see if it holds these lower extremes. I always say it doesn't spend a lot of time on extremes by definition for very long. Last question, Scott. We talked a little bit about CPI headed our way. We look at we broke down the PPI number, but Red Book this morning still to come. We had the NFIB already a little bit below expectations there. I'm just curious in terms of economic data as we work our way through the middle of into the end of the week. Your thoughts and what you're looking at most closely.
I mean, I've been focusing for weeks and weeks and weeks really on the jobs number and have been, for the most part, pleasantly surprised. I mean, the one outlier that still is a concern to me is the continuing claims number. But the jobs number this Thursday, should give us another data point, another indicator of what is happening with shutdowns or the reopening, if you will, and then CPI. So those are really the two big ones that I'm looking at this week.
Okay, continuing claims coming in over 1.3 pretty steadily. So Scott, we'll continue to watch that and some of these markets. Great breakdown in terms of what's playing out here fundamentally. And again, appreciate you helping us take a look at the VIX coming off. Multiple topics covered there. Scott Bauer, the CEO, talking PPI, market reaction to. That was a big move in the treasuries in a big way. Scott Bauer is the CEO of Prosper Trading Academy. Always a pleasure, ladies and gentlemen. Now that we've